Well, good morning, and wow, markets finally caught their breath. Hey everyone, it's Friday morning, December 19th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. U.S. stocks bounced back nicely as investors reacted to easing inflation pressures and started rethinking where interest rates might go next. Tech led the charge. The Nasdaq Composite jumped about 1.4%, rebounding after a pretty rough session earlier in the week. A strong earnings report from a major memory chip maker helped calm nerves around the artificial intelligence trade, which had been under pressure recently. The broader market followed along. The Standard & Poor's 500 climbed roughly 0.8%, while the Dow Jones Industrial Average added a more modest 0.2%. The big headline yesterday morning was inflation. Consumer prices rose 2.7% from a year earlier, while core inflation came in at 2.6%. Both numbers were cooler than experts had expected, which helped fuel optimism that rate cuts could be closer than previously thought. That said, there's a big asterisk on the data. With the U.S. government shutdown still in play, economists warned that both inflation and labor numbers may be less reliable than usual. Even so, the Federal Reserve seems increasingly focused on cracks in the job market rather than stubborn price pressures. One central bank official even hinted earlier this week that rate cuts could come sooner rather than later. On the labor front, initial jobless claims fell to 224,000, down by 13,000 from the prior week. Still, volatility remains high, and experts are urging caution when reading too much into any single data point. In tech news, Wall Street kept a close eye on signs of weakness after a major cloud-related data center project lost key support, weighing on several big semiconductor names earlier in the week. But late-day earnings from another chipmaker painted a much more optimistic picture, suggesting artificial intelligence demand remains strong. And finally, one of the more unusual stories of the day, a social media company tied to former President Donald Trump agreed to a $6 billion merger with a fusion energy firm. The deal sparked a sharp rally in the stock, with investors betting on rising energy demand driven by artificial intelligence. So overall, yesterday was all about relief, softer inflation, hopes for rate cuts, and a tech rebound that helped lift sentiment. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.